Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this members webinar, where we're going to look at crowdsource funding equity raising and give you an update on this very interesting way that you can assist your clients to be able to raise capital from the public. So what I wanted to do first of all was to just officially welcome you and show you the resources which we have. And so what we're going to be doing, of course, is crowdsource funding equity raising update, so that you have a better understanding of what's involved. What I'm now bringing up for you to watch is the material within ESS BIZTOOLS on crowdsource funding equity raising. I've clicked on under the individual products, crowdsource funding equity raising, and we're now going to download the content. The material that you now have on the screen to look at is the procedure control form and all the other forms that are comprised within the crowdsource funding intermediary overview. And then we have the papers that we've prepared that relate to crowdsource funding equity raising and some slides that you can utilize. Let's just stop for a moment and do a little update on where crowdsource funding equity raising is. As you probably remember, the concept of crowdsource funding equity raising was launched in Australia from the then Prime Minister's Malcolm Turnbull's innovation statement in December 2015. It took a couple of years to get the legislation introduced and then passed by Parliament for the crowdsource funding equity raising, and at the same time, the early stage innovation company. But today we're talking about crowdsource funding equity raising. Australia was about 6 years behind other countries such as New Zealand, United Kingdom, Canada, and the USA on the introduction of crowdsource funding equity raising. One of the key aspects of crowdsource funding legislation around the world is the appointment of intermediaries. These intermediaries were appointed by Australian Security Investment Commission. They called for expressions of interest, and I understand they received over 380 applications. And from that, they selected an initial group of 8, and then they've added over the last couple of years to now there is 16 intermediaries. The intermediary market is being dominated by 2 of the companies, Equitise, based in Sydney and also in Auckland in New Zealand, and Virtual in Melbourne, which between them have around 86% of the deal flow that's occurred at this stage. There are 3 other intermediary firms that are also assisting clients, and they make up the balance. What the other intermediaries are doing, I don't know, but I really hope that one day accountants are going to be able to supply enough great candidates to intermediaries that the 16 of them will be very busy, because that will mean that the accountancy industry is receiving substantial fees from assisting clients, and hundreds of SMEs around Australia will be able to raise capital for their businesses, which is very important. Obviously, as a refresher, just to remind you that the companies have to have a turnover of less than $25 million per annum. Their group assets have to be valued at less than $25 million. They cannot be registered on a stock exchange anywhere in the world. Those companies can raise up to $5 million in a 12-month period, and they can come back to the market the following year. And as long as the market agrees with them, they'll be able to raise another $5 million. Incidentally, if in the first 12 months of a company attempting to raise capital, it raises, say, $1 million in one tranche and then spends that money, it could come back and have a further capital raising later in that 12-month period, as long as the aggregate of all capital raised does not exceed $5 million. So that's something worth thinking about with your clients. Now, there is a process that we think you've got to go through, and that is ensuring that your clients are familiar with what crowdsource funding equity raising is all about. Because it would be very embarrassing for a director or a leadership team member to have a dispute with an intermediary or someone else and without a full awareness of the rules. And that's why we have produced the material that we have to assist you to make sure that the directors and leadership team members are well aware of their duties and responsibilities. But let's first of all go to the procedure control form, because this will guide you through this overall process. And guide you through what we're doing. And I'm not sure whether I brought up the right screen then, so I'll just go back and retest that. I think that was the right one. So you should now have the material on your screen. I'm now going to bring up the procedure control form. And this is the form which we now have on your screen. The procedure control form is there to assist you to work through all of the requirements. So it gives you an overview of what we're trying to achieve. There's some viewing that you and your team that are going to be involved in this project can work through. So please read through this material and make sure that you are very familiar with every aspect of crowdsource funding intermediary and the other aspects of crowdsource funding. I was just reading there, the intermediary is the gatekeeper, and you need to be aware of that. We've broken the material into 5 components: preparation, marketing and promotional material, quotation and proposal, summary of crowdsource funding overview, and corporate governance concessions. Now, the corporate governance concessions basically are now finished with. That was when there was special dispensation given to unlisted public companies, because they were originally the vehicle that every company that aspired to be a crowdsource funding equity raising company had to have. But then the law got changed to enable private companies to also be the applicants. And we've set this up on a series of roadmap references. Is your client potentially eligible to be a crowdsource funding company? Is your client interested? Obviously, if a client's not interested, you're probably not going to get very far. What's the level of disclosure? Well, we've summarized that. Your client needs to be comfortable with that. There is some information on past misdemeanors or offences that have involved ASIC that some of your clients might not like the idea that they're going to be publicised. So they need to understand that, that if they're a director in the company, that information is going to have to be disclosed. There's investor categories. The role of the intermediary needs to be understood. The intermediary is very powerful. The Prime Minister, when he was the Treasurer, when he introduced this legislation, described the intermediaries as the gatekeepers for ASIC. And that is the case. They have the right to refuse a company to be listed as a crowdsource funding equity raising company. There is no appeal. The only appeal grounds is the company could go off and talk to another intermediary, but somehow or other, the original intermediary will probably find out. Preparing the crowdsource funding offer document. This is the equivalent to the prospectus. It's a very important document. It contains a lot of information. Most companies will not have personnel that can prepare that document. That would be part of the package of services that you as the accountant or chief financial officer or consultant would be providing. The crowdsource funding offer document, once the company's completed it, has to be submitted in final draft to the intermediary, and the intermediary will read it and advise whether they think there should be some changes made. They're up to the company, of course, but the crowdsource funding intermediary's got the final jurisdiction as to say whether you're going to be able to list your client's company on the intermediary's website or not. So it's best to go along with what the intermediary is saying. The company can then go live on the intermediary's website, and that's when the 90-day period commences. That's the maximum that the listing can be held for. Your client can request a shorter period than 90 days, but I would never recommend that. Always take the 90 days. And if you can conclude the capital raising in 3 or 4 days, which has happened with a few companies of late, that's great. But you never know what can go wrong. And we need to take all the time if need be. We've got some notes on what happens if the crowdsource funding offer document is found to be defective whilst it's listed on the intermediary's website. The intermediary may have found it, a member of the public may have highlighted it, or the company directors or leadership team members may have identified it, or you may have as the accountant acting for this firm. Closing the crowdsource funding offer is a process. Normally it is closed 5 business days after the official date close, because there is the cooling off period that applies for retail investors. They can literally change their mind and ask for their money back. So the intermediaries wait for that 5 days so that they can refund any money that may be requested to be refunded to them by a retail investor. They're then in a position to be able to finalize that particular capital raising. And then we move into step 12, the post-capital raising process, which is that the intermediary produces a report to go to the company, which identifies how much money's been raised, whether it exceeds the minimum subscription amount. And if it does, the intermediary will then deduct the negotiated fee to be paid to the intermediary for the capital raising process, and will deposit the net amount into the company's nominated bank account. If the minimum subscription is not raised, the intermediary has to refund all of the money to the subscribers and to destroy the share application forms that have been submitted, not hand over any details to the company as to who was interested in investing in the company. So it's a very unsatisfactory set of circumstances. The company hasn't got any money for all that effort. The intermediary is not paid because 100% of the funds received have to be refunded. So it is in everyone's interest to make sure that the capital raising is successful and at least the minimum amount that's been specified is raised. The other duty the company then has is to produce share certificates for each of those new shareholders. My recommendation is the chair of the company should be drafting a letter, email to go to the new shareholders, welcoming them to the company, and the return of allotment of shares, which is for the crowdsource funding equity raising shares, then has to be submitted to ASIC. Just bear in mind that the company will then have at least 2 share registers. The first share register will be for the people who were shareholders prior to the crowdsource funding equity raising, capital raising occurring. And remember, there's a 50 shareholder limit for those people. Do we then have the crowdsource funding equity raising shareholders, which could number 1,000 or even more? And there's always the possibility there could be a third register, and that relates to the shareholder, to the employees who have bought shares in the company, because there's provision in the legislation for an employee share register. So that's the overview. And what I'm now going to work through is we have within the procedure, welcome, you can click onto the papers that are contained there, just click on them and bring them up so that you can review them and discuss. There's some marketing material included in the system that you could utilize to promote to your clients. There's some information like a crowdsource funding eligibility matrix, so we might have a look at that. You would badge this form. So when you're sitting down with a client, you would have inserted the name of the company. Is the group turnover under $25 million? Is the group asset value under 25 million? Not registered on a stock exchange. Neither the company nor any related party included in any official list for a financial market. And the company is not going to use these facilities to create a credit facility to the company. The legislation is not concerned about the age of your company, very different to the early stage innovation company rules. And there's no interest in the business or industry in which the company operates. What are 10 key characteristics that might relate to this company if you're thinking about companies that you have in your clientele list? A company or business with a turnover, say, in excess of 2 million that wants to scale up to a larger business. This is going to require money because their inventory will grow, their debtors will grow. They'll probably need to buy more plant and equipment. They may have to undertake a research and development project. There could be some intellectual property to be developed. Then they're investing in people. And people need to be trained and motivated and understand the company. That all takes time, and time costs money. They could be a fast-growing, ambitious business. Company that's wanting to expand, a company wanting to acquire other businesses. A company with a CEO that's got a big audacious idea. And we've all struck a few of those, haven't we? I was in a public company at one stage as the company secretary, chief financial officer. The CEO had ideas every day. Some of them we ultimately agreed with, that's the leadership team, but most others we found reasons not to agree with them. Very diplomatically worded, of course. It could be a CEO with an exciting vision, because you've got to have something that's going to excite investors. A company with debts that the directors would like to repay, save interest, enables a security that's been supplied by probably by someone else to be released. That could be the situation. It could have been a mum and dad loan that looks like it's never going to get repaid. The company wants to expand. They might be able to get rid of that. Company with a succession problem, an injection of new capital could assist in sorting the succession issues out. Could be a company that hasn't qualified for the early stage innovation company, which you might recall is basically for companies that are primarily under 3 years of age, but some companies up to 6 years of age can qualify. But the company needs to have an income of less than $200,000 in the year, not including any grant monies relating to the accelerating commercialization grant. Or they may have expenditure of more than $1 million because it's $1 million or less expenditure. So it's fairly narrow, the early stage innovation company. So the next alternative, if the company doesn't qualify under that, would be to look at the crowdsource funding equity company being suitable to assist a company that has developed a new product, process, or service and now wants to get that into the marketplace. And the company may have a unique competitive advantage that they want to capitalize on, take it to the market. So they're the sort of activities that you might look at to determine whether the company might be interested. And we can see here there's more procedures. I'm just going to move on. We have in our system a pre-prepared quotation and proposal that you can use to save you time. So we now get down to the work. You've won the job. The client's giving you the okay to proceed. You want to sit down and talk to your client and give them an overview of what's involved. Now, we're just going to click on a couple of these items so that you can have a look at them and familiarize yourself or remind you that they're here. The first one is a summary on the issuer cap. So the issuer cap is the company can only raise $5 million in a 12-month period. So it's amounts being raised under this mechanism, crowdsource funding equity raising, but it also includes what are known as small-scale personal offers under Section 708, subsection 1, within the previous 12-month period, and amounts from certain offers made through a holder of an Australian financial services license. And there's a table there which gives you an overview of how all that fits together in determining the offer cap. So you cannot exceed $5 million in the 12-month period. Corporate governance concessions, I'm going to skip that because it doesn't apply. As you can see there, after the 19th of October 2018, we will be removing this section from our material in the next couple of months because it's no longer appropriate to have it there. Level of disclosure is very important, that you make sure your client understands, I think, so that you avoid embarrassments. So we've got a form here which will help you go through and look at the funding. I'm just going to try to get that form to fit the page a little bit better. Just bear with me. How's that? And we've got links to other forms here, so you can follow this through. Crowdsource funding involves the company, the issuer, the intermediary, the gatekeeper, and investors. And we've then got details of the public company involvement. Let's see, unlisted public company and small proprietary companies. There's a limit for retail investors at $10,000 in a company in a 12-month period. So there's some forms which you need to work through to get a full appreciation of what is happening. There's some general investor protection that you need to be familiar with. So the company and the intermediaries must comply with the stipulated advertising rules. Very important to have the crowdsource funding risk warning prominently displayed in everything, especially anything concerning a retail investor. The only way that an investor can invest is via the crowdsource funding intermediaries platform, which is their website. So your favorite aunt or the favorite aunt of the CEO can't give him a check for $100 to invest. She has to go onto the intermediary's website, read the investment warning, acknowledge that she has read it, and then complete the application there and pay the $100 to the intermediary. The intermediary has to operate a communication facility. That's basically an internet site, and ensure that it's opened every day for the listing, and ensure that if there's a request for information that a director or leadership team member has to supply, that there's follow-up and that is organized. I think it's a good practice to ensure that everyone's available and that these responses go out within 24 hours, because other people can read this communication flow and understand the questions you've been asked and the answers that have been supplied by your clients. They need to make sure that all this is functioning well. We then move in, you can go into the documentation for the crowdsource funding offer document, which is very important. So that is able to be submitted to the intermediary for signature. This is the overview of crowdsource funding equity raising. I would urge you that to keep an eye out for clients that might be interested in utilizing this facility to raise capital. Just bear in mind that each of these companies is going to need a business plan, budgets, cash flow forecasts, and the leadership team needs to be keen, needs to have a fire burning in their stomach. They want to achieve some things. And they appreciate that the final ingredient in their business cake, if you like, is money. They got the idea, they got the intellectual property, they got the team, they've trained the team, they have distributors in place. All they need is some cash. That's what this market's all about, finding that cash for them so that they can then expend it to develop the company's market presence, market strategies. So that's the brief overview of crowdsource funding equity raising. I would urge you to familiarize yourself with the material, because sooner or later, someone's going to walk into your office and say they want to talk to you about crowdsource funding equity raising. It's a great opportunity. There are attractive fees available because of the amount of work that's required. And it's very interesting and challenging work for your younger accountants to be involved in. And I'm very mindful of the report that Accountants Daily published in last December, wherein they indicated that 70% of employed accountants were looking around. They were surveying the scene, I think were the words used, as what offers were potentially available from someone else. One way you can keep your accounting team intact and motivated is by offering them interesting and challenging work. Crowdsource funding equity raising definitely gives you that. Thank you for your support of ESS BizTools and ESS BizGrants. I look forward to talking to you again when we present our next team training presentation. If you have any questions, please send me an email, peter@essbiztools.com.au, or give me a telephone call, 1-800-232-088. Have a great day. Stay safe. Thank you.